Wanna see you with it, show can treat you right. Give me just a minute of your time tonight. We both are here to have big fun, so let it rip.
Yo, what's going on, believers? It is Wednesday, so happy Wednesday to you all. I'm going to do another update to the weekly outlook. So let's go ahead and get into the charts. So if you recall from the last couple of videos, more specifically the last one, mentioned this imbalance here on the daily chart for the dollar, that it could offer some support for a run to the high from last week, which is up here. So drag this across. That is still the weekly draw on liquidity for me. Once Monday was done trading though, that low became the draw. As you can see, that low was reached Tuesday, excuse me. And now with Tuesday closing how it did, inside of this imbalance, failure to close below Monday's low, up here becomes my draw for today actually. So have buy side here that's below the weekly buy side that I'm looking for. So be interested to see if sometime between today and Friday if it'll work its way up to at least this buy side here. But of course by the end of the week I'm anticipating a run towards last week's high. If it fails to get there this week, of course still most likely going to be looking for that follow through next week. But so this is the dollar. I already outlined this area. One thing I do want to mention real quick before moving on is that these higher time frame areas, one of the things that was very confusing and I guess a stumbling block for me when I was first learning about these different tools on the higher time frame, and they're not just higher time frame, but just tools can be used on all time frames. It's just that the higher time frame use of those tools, I have to apply patience to it. And so the problem was, for example, I see something like this where, okay, this big bullish candle, the next candle is also bullish, and so it leaves this imbalance here, right, this fair value gap. That first drop down into it, I want to see a reaction here that then sends it to that high. That was how I was expecting these to work when I first was introduced to them. Now on the lower time frame, that is reasonable to expect that. Like if this was a 1 minute chart, for example, and I get a 1 minute fair value gap like this, and I'm looking to enter on that fair value gap, I don't want to see all of this activity inside of it. I want to see one candle touch it, and then ideally that same candle leave. But if it takes into the next candle, then I want to see that next candle leave aggressively from the area. But with the higher time frame, like I said, I have to let time do its part. So this was the first day that dropped down into it, but I also have to keep in mind this is the first day of a new week, right? And so typically I don't like Monday making the higher to low of the week anyways. So what happens here, Tuesday drops down, takes out Monday's low, goes real close to the low end of the imbalance, but then closes back above Monday's low. So we're setting up for where Tuesday could have potentially been a low of the week. But also, a lot of times, Wednesday will outdo Tuesday in the sense of it'll make that high, that low of the week before price then reverses. Because dollar's been stuck in a consolidation here in a sense, which is beautiful though, right? Instead of me anticipating this as a reversal back lower, because of the nature of the delivery, with it being indecisive, it being back and forth, mostly range bound, right? I can then anticipate, well, if it's in a range and it's just been bullish for about 3 straight months, and then it starts to what some people may call exhaust or find weakness, right, in the resistance areas that it's bumped into. But I'm just looking at this for now, right? Not trying to shift anything. Just go to the weekly real quick to be clear about how bullish dollar has been. So nothing on a weekly time frame here is showing me any sort of reversal back lower just yet. But of course that could change over the next couple of days. But as far as the time being, just utilizing right what's available in price right now, there is a potential support range here on a daily that is offering support, so I can't ignore that, right? I would need to see a close below here for me to invalidate this area, or even at least a close below the halfway point of it. And if you know you're looking at the same chart that I am, and I have my cursor pretty much across the middle of that blue shaded box, no candle body was able to close on or below the halfway point of the range. So still bullish, in my opinion, as long as that stays. Now, finally, going to the other assets. I do recall that I mentioned in the last video specifically how US 30 trading above these highs here could be a catalyst for resistance and lower prices in all the indices. So I like the rejection here, right? So the drawn liquidity became Monday's high because of the way that Monday traded. Tuesday does go and knock out the high, the close back inside the range. Now I'm looking for Tuesday's low to be taken out. So at the very least, if I don't get a run to right that previous week's low, which is down here. Actually, no, this is previous week's low. These are just lows from within that structure of last week, from the daily chart, that are still draws on liquidity. So 30 may not be the first one to reach that previous week's low. It's been the furthest away from it and the least willing to go back down towards it, it seems, right? Look at how this is last week's low on ES. It's really just been in consolidation, but it didn't make a higher high than it did last week, right? So last week's high and low are still intact. So long story short, we're inside of last week's candle, so it's an inside bar printing right now. But if you look at 30, it's taking out the high of last week. It's back within that high, right? You see, this is where we're trading now, and that was a high, so it's back within that high though. And then looking at it in Q, same thing, is within the range, right, of last week's candle. So also with the indices, just to be completely honest, right, it's not exactly showing any signs of weakness, but that's the problem with waiting to see price doing what I want to see it doing first before getting in, is that the risk is increased, and it just really makes it obvious that I'm not playing the probabilities, and that I'm trying to be right by waiting for price to be moving already in the direction that I was anticipating before I decide to take on any risk. But for me, the real success will come from understanding areas, ranges, and specific levels, and knowing the probabilities of one thing over the other at that level. And then just what this says here, right? Play the probabilities, the favorable probabilities, right? So I will have some sort of understanding of the quality of the setup when it's presented to me. Then all I can do at that point, right, is I can control the risk that I apply to that setup. And then as the trade is going, I can manage the trade. I can close partials and profit. I can close partials at a loss, right? I can re-add, or I can just add to the position, you know, protect the initial entries, scale in with new entries, right? There's a lot of different ways to do it as far as that management part. But just wanted to reiterate that there are a lot of ways to do this, and I'm just walking through the mindset that I have about the way that I am as a person, right? My personality, my characteristics as a person, and what fits best with that. So again, real quick, so Dow Jones, right, was able to go and knock out last week's high, And also yesterday took out Monday's high, so potentially setting up a Tuesday high of the week, which would be phenomenal. Even if it doesn't reach last week's low, even digging down into this swing low, which it left on Thursday, would be enough for me for this week. And then of course next week going into the end of the month, we'll still be looking for that low from the past week to be taken out. And so same thing over here, just with the exception of not taking out last week's high yet. So not as bullish as 30, but again, 30 has rejected the high. So not like 30 took out the high and is sitting above it and continuing to push higher. It went above it and then rejected, right? And very similar fashion to how this looks here, where Monday's trade-in ended, Monday's high became the draw on liquidity, Tuesday runs Monday's high. And so now Tuesday's low, becomes the draw on liquidity just for as the daily time frame is concerned, right? But then still for the weekly, looking for last week's low to be taken out. And so that is that. And then last but not least, actually, so Monday's high was also the draw for NASDAQ. It was not able to reach that high, but it did go and actually take out that low from Friday, which was the daily draw once Friday closed for Monday. But of course Monday had no interest going down there, traded higher, but Tuesday had lots of interest going there. So what's setting up now is NASDAQ has its high of the week on Monday so far and the low of the week on Tuesday so far. So NASDAQ is one of them really NASDAQ and US 30, and here's a picture of how I'm utilizing these differences in price action between them. So what you'll notice is I have 4 charts up, top left NQ, top right ES, bottom right YM, and then bottom left the dollar, So where you see the only drawing that is on here is actually representing from the morning from Monday, which essentially put in the high, and the morning from Tuesday. So it's just a line representing how price was delivered between Monday morning and Tuesday morning, as far as indices are concerned, how it was delivered at the highs. All right, so my focus over here on NQ, and it's actually anchored to the afternoon for Monday, but that's because that was the highest point that printed on Monday, So the high for Monday was in the afternoon, and the high from Tuesday was in the morning. What I'm noticing is that the high on Tuesday was lower than the high from Monday. ES over here, contrarily, was the high for Monday created in the morning, high from Tuesday created going into the afternoon, but Tuesday takes out Monday's high on ES. Same thing in Dow Jones, very similar time window. It's actually exact same time window, morning Monday to almost afternoon Tuesday. Tuesday takes out that Monday high. So what we have in ES and YM is higher highs, and NQ a lower high. So there's just a cracking correlation there, The higher highs indicate willingness to go higher in these two. The lower high indicates an unwillingness to go higher in NASDAQ. So is NASDAQ kind of the precursor to underlying strength underway with indices, and the higher highs in ES and YM just being manipulation? Because just looking at the lows as well, So those same days, that low from Monday to the low created on Tuesday also happened in the morning, The London Open and NQ prints the low, and then the low is pre-New York on Tuesday, which just so happens to be lower than the low that was printed on Monday. So just to go ahead and add this on there as well, just for the visual reference, look at how that low was taken out the next day, and then looking over at ES, right, that low was not taken out, and then I'll even use this just because this is the swing low and go to here. And so look at how like for pattern traders, right, someone could look at this as like a upward channel, right, an upward channel, and it needs to break the upside or downside before any sort of direction is determined. Now 30 is looking like it's giving a potential attempt at breaking the low end of it, but again, I'm not utilizing this for real, because this would basically essentially be a trend line, right, using the trend line from the lows here and just essentially saying that a breaking of that trend line would signify that lower prices are underway. I don't exactly subscribe to that way of trading or that way of analysis, but I'd be lying if I said that there aren't people that have been able to work, you know, their own system around that way of trading. Like, because there's a lot of ways to do this. Like I mentioned, it's just about playing in favorable probabilities, controlling the risk, and managing the trades, right? But so then looking over here at the dollar, right, so again, how it made a low Monday afternoon, and then it makes a lower low by Tuesday morning, right? So dollar is showing weakness here, as well as also printing lower highs. So dollar and NASDAQ are actually looking really similar, and Dow Jones and ES are actually looking really similar to each other. And that's, for me personally, a characteristic of low probability conditions. I want to see the indices all three doing the same thing, and then whatever all three of them are doing, I want to see the dollar doing the opposite. If I get those types of conditions, it's high probability. Anything else is relatively low probability, right? And so, long story short, again though, so really keeping the eye on NASDAQ here. If it, for whatever reason, shows a willingness to go higher after signaling weakness, right, with a lower high and a lower low, right, if it then has some willingness to start running higher, then I'm going to take this initial cracking correlation that NASDAQ presented as cap, right, as NASDAQ was the one that was lying, and that the indices are going higher. NASDAQ just had to run, right, that intra-week low from last week for a sell side, right, before being allowed to continue higher for buy side. Because outside of that, the structure is pretty similar in the three of them, right? So it's just about getting some sort of indication from NASDAQ on whether or not it's going to continue, right, lower as it presented weakness. Now, if the dollar can maintain bullishness and start to, right, run back for that new week opening gap that is left. Remember, I mentioned in the last video as well, the reason why I even needed to do an update was everything opened with a gap, right? And that those gaps presented more data for the analysis, and so the gaps are very relevant, right? Dollar is still below that gap. NASDAQ is the only one of the indices that actually traded all the way to the opposite end of it, but it did come back to the high with the above side of the gap. So that was something that NASDAQ did that the other ones did not do. As you can see, this was, you know, Friday's close, new week's opening. So this is that little gap here. See, NASDAQ traded through it, but with a rejection, right? This is that gap here. So no interaction from ES. And then same thing with 30, right? This is that gap here, no interaction there just yet for the week, but it's still expecting lower prices and indices as long as the dollar can hold basically this FEG as support and start to rally towards previous days highs. And so with that being said, shout out to the believer, shout out to the dreamer, shout out to the homies that inspired me to be better each and every day. I love you, appreciate you more than you know. I will catch y'all in the next one. Peace.